Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Nehisha, and this is the show where we take you through all the stocks that are buzzing in trade, either on the back of news flow or on the back of technical charts. But first up, let's take stock of how the market is faring. Well, markets a weak start to a full week of trading, the first full week of trading for 2025. In fact, Nifty is down all 300 odd points. Sensex is down 1,000 points, and India VIX has shot up more than 14.5%. Snehi, and as of now, we have reported 3 cases of HMPV virus that has really spooked the markets.
Well, absolutely 2 confirmed cases, and the third one is something that we're hearing about yet. But nonetheless, that has very visibly spooked the market. India VIX back up again, 14.5%, roughly 15% spike coming in just on intraday basis. You have the likes of Nifty Bank, that's on the lowest point of the trading day. Nifty Bank not holding up very well at all. There you have it. Slipped below the 50,000 mark is where the Nifty Bank is. A 2% cut coming in just on an intraday basis. What's also not doing well is the benchmark Nifty. That's down roughly 2% from the day's highest point right now. Nifty small cap and mid cap, the broader markets also not holding up very smartly, and Sensex also in tandem 1.7% lower from the day's highest point. So not looking good for any of these sectors right now. But speaking about sectors, last we saw IT in the green. IT continues to hold its position in the green. However, that's only barely coming in, or rather it's also slipped into the red right now. So now you have all your sectors trading in the red. Losses being led by Nifty PSU Bank, 4% cut coming in on the back of some quarterly updates that these banks have reported. Nifty Metal on the back of the Jefferies note, Energy, Realty, Media, Auto, FMCG, Pharma, IT in that pecking order. Your most least losers when it comes to sectoral moves. You only have a bunch of stocks, roughly 6 or 7 stocks from the Nifty 50 pack that are in the green. Rest all of them continue to languish in the red, with Trend, Tata Steel, Coal India being your biggest losers of the day. So that's what the market is seeming to be like right now. The market breadth looking very, very shallow and weak as we speak.
Alright, and with that, let's get started with all the stocks that are in focus today. And on the back of technical charts and news flow, Aditya Agarwala, Head of Research and Investments, Invest for Eddie, is joining us on the technicals. And from a research team, we are joined by Ansh. Hi, good afternoon to both of you. Thank you so much for joining us. Let's get started with all the stocks. And first up is Titan, that is in focus today. In fact, the stock was up more than 1% in the morning, has given up those morning gains, is nonetheless trading in the green with gains of 0.4%. But let's look at what the updates are saying. Well, as far as the standalone business is concerned, that has registered a growth of 24% on a year-on-year basis in the December quarter. For October to December period, Titan's jewelry business grew about 26% on a year-on-year basis, buoyed by strong festive demand and robust consumer traction during Diwali, translated into high single-digit buyer growth along with double-digit ticket size growth. Plain gold also saw a growth of about 24% on a year-on-year basis, benefiting from the increased gold prices, festive and the wedding purchases. Well, notably, gold coin sales grew about 48% on a year-on-year basis, reflecting consumer preference for gold as an investment avenue and customary purchases during Dhanteras. On the back of some good data coming in for Titan, Titan is in focus today, currently giving up those morning gains, nonetheless in the green with gains of 0.4%.
Okay, so that's Titan holding on to gains even amid a sideways market as this. But Aditya, hi, good afternoon, welcome to the show. Your first stock you've picked out for us is Bajaj Auto on the charts. Tell us what the chart is looking like, because last 6 months, if I pull up the chart, the stock seems to have not done anything at all. In fact, a negative return is what the stock is given. Are you penciling in better days for this automaker now on the charts?
Hi Ankita, hi Snehi, good afternoon, thanks for the show. I think there are very few pockets right now in the market which look like they will see an uptick from here on. Bajaj Auto is one of them, purely because of the fact that the stock had corrected significantly previously. Now it's formed a good consolidation base. Now it's trying to break out of that base. Having said that, yes, one has to look at markets and keep a close eye on how the indices are behaving, as in more cases we get in India too. There could be a knee-jerk reaction in the market. I don't think that markets will react too much because we've already seen a COVID-like situation. So on the same news, I don't think so markets will have a prolonged correction, which is why I picked up Bajaj Auto, which has already corrected significantly and has broken out from a narrow consolidation phase, or rather on the verge of a breakout from a narrow consolidation phase, which suggests that a bullishness is building up in the stock slowly and gradually. On the upside, it can test levels of 8,700 to about 8,800. With a support on the downside, with a support on the downside at 8,800, 8,700, I think stock can easily test levels of 9,300 to about 9,500 on the upside. And plus RSI has moved beyond the 40 level, which tells me that the bullishness is slowly and gradually inching in the stock.
Okay, so that's the take coming in on Bajaj Auto and the levels to be watched out for when it comes to the charts. But let's move on, talk about one of the biggest losers in today's trade, and that is Union Bank. And on the back of this stock, the entire PSU bank basket is also languishing away. Now, shares of the state-run Union Bank fell as much as 7% today and continues to be around those levels. In fact, 7.5% lower as we speak. They've released their December quarter update, which is their weakest update that they have released so far. Union Bank's deposits for the quarter increased by 3.8% on a year-on-year basis, but when you compare it with the September quarter, sequentially, it's a 2% drop coming in. Advances growth during the quarter also stood at 5.9% uptick year-on-year. On a sequential basis, that number has grown by 2.2%. Now, when you talk about the total global business, that has fallen roughly 0.2 on a quarter-on-quarter basis. Total deposits were also down 2% sequentially, and the lenders' global gross advances also rose. They rose 2% on a sequential basis. Domestic CASA deposits down 0.2 sequentially, and down roughly 0.5% on a year-on-year basis as well. Domestic advances rose 2% sequentially and 5.3% year-on-year to come in at 9.13 lakh crore. This is roughly what the quarter 3 update looks like from the company. Overall, if you see on a sequential basis, numbers are looking bleak. However, on a year-on-year basis, they're looking steady. With the sequential part of these updates that has spooked the street, and the stock is lower by 7.5% as we speak.
All right, moving on from a banking name to another banking name. RBL is the name that you picked out for us, Aditya. The banking names are under pressure today, of course, on the back of the quarterly updates that we are seeing, which were below the street expectations. But tell us, what are you seeing on the charts for RBL Bank? Now, this one has also been in a long consolidation mode for the last 6 months. From here on, does it start moving up? Is there a recovery on the cards? What do you see on the charts?
I think so, Ankita, there is a recovery on the cards, because if you take a look at the last 6 months or maybe a year's performance, stock has corrected significantly from around 390 odd levels to about 290 odd levels to about 160 that it is trading right now. And now it's formed a good base on the downside, and I think so it's breaking out of that base, and a good consolidation has already happened. Risk to reward is also in favor of going long. If I plot an RSI and MACD, both show me a crossover with its respective trigger line. So on the upside, I think 180 to about 190 is easily possible on the stock. On the downside, 153 is a very strong support. So all you have to do is just place a 10 to 15 rupee stop loss on the downside, and you can play for a target of 180 to about 190 on the upside. Give it a few weeks time, and you can definitely see an up move in the market, because in the stock specifically, because markets are down today, which is why stock has seen a bit of a profit taking from the highs.
Okay, so that's the outlook coming in on RBL Bank. Ansh, coming to you now. You've picked out Dabu for us on the back of its quarterly updates, weak set of numbers coming in, and that seems to be the case for the entire FMCG pack overall. But tell us why Dabu is in focus and exactly what the update looks like.
Yes, so revenue is expected to grow in low single digit, and the home and personal care segment is expected to grow in mid to high single digit, whereas the healthcare and beverages is expected to be in a flat zone. Whereas if you talk about the international business, then that is expected to register double digit growth. And also the management is expecting flattish operating profit in quarter 3. We also have few brokerages, and they are actually bullish on the stock. Macquarie has maintained neutral stance with a target price of 560. Currently, the stock is around that 500 mark. CLSA has maintained hold rating with target price of 582, whereas Morgan Stanley has also maintained an equal weight rating with a target price of 531. So currently the stock is in pressure due to market is selling. But despite of this, it is trading around its psychological level of that 500 level.
All right, moving on then to another player from the FMCG basket, and that's Tata Consumers. Coming to you, Aditya, that's the name that you have picked out for us. Tata Consumer is doing decent. It's holding on to gains of 1% in today's trading session. But, in the last 6 months, again, this one has been in a corrective phase, just like the other counters from the FMCG basket. From here on, do you see a reversal coming in on Tata Consumers?
Completed a corrective phase and a corrective pattern in technicals, and now it's formed a decent base around 61.8% Fibonacci retracement level. From there, it's bounced back significantly So I think from here on it can test levels of at least 1,050 to about 1,100 on the upside. Give or take a few percentage points from here and there, it can definitely test levels of 1,100. On the downside, good supports are around 920, 910 odd levels, and plus recent up moves, if you clearly check, have been on the back of excellent volume. So that tells me that this up move is here to stay. Volume backed up move we are witnessing in the stock. At current levels, one can add even on declines all the way till 920. One can look to add, put a stop loss just around 910 and look for a target of at least 1,050 to about 1,100 on the upside.
Okay, so those are the levels to watch out for on Tata Consumer when it comes to the charts. But on that note, we'll slip into a very short break on this edition of Market Fadafat and keep it going with all the big buzzers on the charts as well as on the fundamentals on the other side of this very short break.
Right, welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today on the back of news flow and technicals. Let's get started yet again. Then, SBI Cards is in focus today. It is coming on the back of a brokerage road to Nuvama that has upgraded the stock to buy from an earlier reduced, and the target price is 850 rupees per share from the earlier 723 rupees, which is a 20% upside from the CMP. Now, the upgrade on improving credit growth outlook is something that Nuvama is seeing for the company over the last 2 years. Its earnings have missed consensus due to a persistent rise in credit cost and low visibility of a turnaround. But they reckon that the credit cost peaked in Q2 of FY25 and the credit cost would remain stable in Q3 of FY25 estimate. Now, the credit cost shall start improving from Q4 FY25 estimate, and the potential rate cuts by the RBI over coming quarters shall be an added positive for SBI Cards. And on the back of this positive bullish brokerage note, SBI is in focus today, trading with gains of 1.5%.
Okay, SBI doing very well in a market like that. But Aditya, you picked out Havells for us on the charts. Last 6 months also very subdued performance. It's been in a consolidation phase over quite some time now. What's the outlook for Havells on the charts, and now time for a turnaround, time for some recovery? Is that what we're spotting on the charts now?
Not really, Sneha. I think we will see a prolonged correction in the stock. In fact, it's on the verge of a breakdown from the neckline of a head and shoulders pattern after a decent correction. Stock witnessed a bit of a pullback, faced resistance around 200 DMA, from there again turned down, and now it's on the verge of a breakdown from the neckline of a head and shoulders pattern. A sustained trade below maybe 1640 will trigger a further correction all the way down to 1550 on the stock, maybe lower to 1500 as well. I don't rule that out. On the upside, immediate resistance is at 1700. Till the time this 1700 is taken out decisively, I don't see any road of recovery for Havells immediately. In fact, if I plot the technical indicators, they are gradually inching lower and heading into the bear zone. So that tells me that weakness is here in Havells to stay and can probably increase further as we go ahead.
Okay, so some more weakness being penciled in on the charts for Havells, at least by Aditya. Let's move on, talk about a stock that was holding up very smartly in today's trade, and that is Nika, because shares of Nika have rallied more than 5% today after the company announced a strong third quarter update. That has simmered down slightly, but nonetheless, given the market and the way it's been shaping up, a 4% gain looks very solid for Nika right now. Let's talk about the third quarter update, where the net revenue growth is expected to be higher than mid-20s. The GMV growth for the beauty vertical is expected to be in low 30s, indicating strong momentum across all of Nika's beauty business e-commerce platform, retail stores, own brands, and the eB2B distribution segment as well. Nika further informed that its fashion vertical is expected to deliver a net revenue growth of around 20%, while the net sales value growth is likely to be in low to mid-teens, indicating continued strong growth in content, marketing, and service-related income. On the back of this update, we have a brokerage note coming in by Morgan Stanley, where they've maintained an overweight rating, target price of 200 rupees per share. They believe that Q3 is going to be strong when it comes to beauty growth. Fashion is going to be in line with expectations, and the beauty and personal care segment, that businesses witnessed strong momentum across the e-commerce platform, retail stores, as well as the owned B2B channel. The fashion business has continued to witness strong growth in content marketing, like the company has mentioned as well. So positive note coming in, good set of numbers, good set of Q3 updates rather, stock up 4% as we speak.
All right, moving on then, coming to you, Aditya, from the IT pack, Persistent Systems. Now, this one's done pretty well for itself. In fact, the entire IT pack has been pretty resilient, even in market downturn. Tell us from here on, where do you see it headed? 38% return in the last 6 months. From here on, where do you see this counter going?
Ankit, I think that could be a bit of a profit taking in the stock because it is sitting at extreme overbought level. Stock has been outperforming, as you mentioned, right from the word go post election results in India. And I think now it's time for it to take a little bit of a breather. I'm not saying there is any trend reversal in the stock. It's very strong. It's going good. I just feel and I just oversee probably a mild profit taking in the stock after it had formed a couple of double tops on the weekly time frame. Stock has gone a little weak. Now, if it breaks 6250 on the downside, chances are high stock can slide all the way down to 6,000 odd levels. So maybe for those reasons, I think a fresh short can be initiated here below 6250, 6300 for a target of 6,000 on the downside, and then 5800 with a stop loss just around 6400 on the upside.
The levels to watch out for on persistent systems on the upside. Ansh, coming back to you, you've picked out the PSU Bank, Bank of Baroda. Tell us what the Q3 update is looking like and what's the stock doing right now.
So their global advances is up by around 11.6% on year-on-year basis to that 11.7 lakh crore. Also, the global deposit has gone up by around 11.8% to 13.9 crore, whereas the domestic deposit is up by more than 9% to 11.6 lakh crore. But the deposit growth guidance was lowered from 11% to 9%. Also, the loan book growth guidance was also lowered from 13% to 11% is the reason why we are seeing selling in the stock. Also, if you see on chart, then stock has given a breakdown from that key supporter 240 level, hitting 1 month low level.
All right, moving on then from Bank of Baroda, we'll move on to Polycab. Aditya, you picked up Polycab on the charts for us. Now this one's, it hasn't, in the last 1 month, in fact, last few weeks, it has been consolidating, as I can see. Tell us from here on, where do you see the stock headed? What are you seeing on the charts for this counter?
So Ankit, the stock has already started making lower lows, lower highs, and today the stock is down almost 3% in trade. Has made a new low. I think it is headed lower from here on as well. Can test levels of 6,800, 6,600 on the downside. So that's a significant downside that I see in the stock from here on. On the upside, 7,100 happens to be a major resistance. And plus, the RSI has also not been able to cross the 60 level. From there, it's turned downwards. So that clearly tells me that there is a shift in the momentum from bullishness to bearishness. And the RSI is also moving into the bear zone right now. So at current levels, I will definitely not be a buyer in the stock. If I already own the stock, maybe look for profit booking when I'm sitting on profits. Maybe initiate a fresh short in the stock for a target of 6,800 to 6,600 on the downside with a stop loss just around 7,100 on the upside.
All right, that's Polycab on the charts. But moving on to Brigade Enterprises, the stock was up almost 1% in morning trade. Let's pull up the charts and see where it is right now. In fact, it has given up those morning gains. In fact, it has moved into the red, and it's now reeling at a selling pressure of 1%. But nonetheless, Brigade Group will develop a residential product in Bengaluru that is spanning over 20 acres with a GDV or gross development value of over 2,700 crore rupees. And on the back of that, Brigade is in focus today. It was trading with gains of, like I said, 1%. As succumbed to selling pressure, is now trading with cuts of 1% in trade.
Okay, Brigade Enterprises in focus on the back of that new property development that they're planning to do in Bengaluru, and a lot of real estate counters have been in focus. Q3 updates have started to trickle in. Brokerages are continuing to be bullish, but let's talk about another brokerage note that we've got today, and that is coming in from Kotak Institutional on Dr. Lal Path Labs. They've upgraded the stock to an ad rating at a target price of 3,250 rupees per share. Stock is holding up pretty smartly at 3% gain coming in on an intraday basis. They've upgraded the stock after recent stock underperformance. They believe that the execution and its stated strategy are on track, and they expect the company to gradually tide over leadership transition. That used to be a challenge in the past. The pricing actions are also going to look positive going ahead, and across 7 cities also, when you take a look at the pricing action, they have been relatively sparse, and that is also coming in Q3 by online and offline players. So that is also something to watch out for, because you have the likes of Tata MG that has increased its prices in Mumbai and Delhi by 20%. So they expect volume growth to pick up steadily when it comes to the suburban and tier 3 and tier 4 towns. So looking very positive for Dr. Lal Path Labs. Stock is up 3% as we speak on the back of this Kotak note.
All right, that's a note coming in by Kotak, and you can see the movement, the impact on on the stock that's trading with gains of 3%. But coming to technicals, Aditya, you picked out the same counter for us, Dr. Lal Pathlabs. Tell us, what are you seeing on the charts for this counter? I mean, this counter hasn't really moved much in the last 6 months. In fact, last few weeks it has been correcting. But now, of course, the bullish note has been from brokerage note has given a fillip to the stock. But on the charts, where do you see the stock going?
I think stock will be headed higher. It has taken support at the 200 DMA. In fact, not only Lal Pathlab, I think all these diagnostic stocks can, for at least few trading sessions, be in focus, can see further upside because of these virus that have come into India now. So at current levels, I will definitely buy in the stock. Look for a target of at least 3,300 on the upside. Can test 3,370 as well. On the downside, immediate support is at 2,900. So the risk to reward is also in favor of going long. The 200 DM is also at 2,900. That is a very strong support area. Plus, look at the kind of volume that we are seeing in the stock today. It's up on extremely healthy volume. So that tells me that this up move is here to stay. Can easily test levels of 3,300, 3,370 that I just mentioned. And plus, RSI has also moved beyond the 50 level, which tells me that the bullishness will likely to continue in the coming trading sessions.
Okay, so that's the view on the technicals coming in on Dr. Lal Pathlabs. Ansh, coming to you once again, an FMCG named Marico. Good set of quarter 3 update is what the company has given. Tell us what the updates look like, even though the stock seems to be under pressure right now.
That's right. So the domestic business posted a sequential uptick in volume growth with sustained market share, whereas the international business has delivered broad-based mid-teen constant currency growth, and the consolidated business delivered mid-teen revenue growth on a year-on-year basis. They were staying on course to meet the double-digit growth aspiration on a full-year basis. Also, we have many brokerage reports. CLSA has maintained an underperformance rating with a target price of 482, whereas Morgan Stanley has maintained an equal weight rating with a target price of 625, and Macquarie has also maintained outperformance with a target price of 570.
All right, with that, it's time for us to slip into a short break. But before that, our colleague Prakash Priyadarshi also caught up with the PR Jaishankar, who's the MD of IFCL, in an exclusive conversation where Jaishankar shares that he expects the current budget to focus on infrastructure and more. Let's go across and listen in to this conversation.
The current loan portfolio size is around 63,000 crores. We expect to complete this year by March 31st. We expect to reach about 70,000 crores. And the loan book is 70,000 crores and the balance sheet size would be around 80,000 crores expected. In the next few months, we would like to cross the 1 lakh crore as far as the balance sheet size is concerned. Within the next 3 years, we are confident of reaching 2 lakh crores. So that will be the way we would like to progress, and I am confident that with the kind of strategies that we have and we have the systems that we have put in place, this would be a very normal task for IFCL.
Since the budget is around the corner, if you could share some of your expectations from the government.
I am very confident and optimistic that this budget also will continue to support infrastructure like all the previous 10 budgets we have had.
Any specific suggestions, sir?
It is mainly infrastructure oriented process that can actually propel the GDP. So I'm sure the budget will take care of that, and it will be a infra leaning budget.
The RBI's draft project financing norms. Since you have already submitted your comments, any further communication with the government or the RBI?
No, we don't have any further communications. We expect that the consultations of the RBI with a larger number of players will definitely lead to a very good sound infra-specific regulatory framework.
If you like this video, then like, share and subscribe to ET Now.